Hello everyone, my name is Akmal and I am a representative from my group that is going to be doing this video. And this video, what is it about you ask? Well, this video will hope to be guiding you all investors more basically on fundamental and technical analysis. And I am here to be using Google or Alphabet Inc. in others words as an example in this video to be discussing about these analysis. So moving on. So for this video, I will be showcasing or discussing on these topics. And these topics, it will basically give us a better insight about what we're going to learn. And so I will be telling you about the overview of investment analysis methods, the importance of informed decision making in investments, and the focus on fundamental and technical analysis. So these two analyses will be the main star of the show, and it will be going to be our main topic that we're going to be discussing. So let's move on to the first analysis. Fundamental analysis. It is basically a method which is used to evaluate the intrinsic value of a security or whole sector in markets. Intrinsic value, by which it means real worth. And so it involves examining the financial health and performance of the individual company or assets. Now, moving on, we also have technical analysis. Now, technical analysis is different from fundamental. As you can see, technical analysis is a method used to evaluate investments and also identify trading opportunities. Now, it involves studying the price movements and patterns of financial assets. That assets include bonds, currencies, and commodities. Now, as we learn about the two, we notice there is some differences between these two analyses. They both have their own different function. So, let's go through them, shall we? So, for fundamental analysis, as you can see, it focuses on financial statements and economic indicators to assess an asset's intrinsic value, while for technical analysis, it examines share prices and trends to identify investment opportunities. These two analyses have a different function from each other. And moving on, we can see fundamental analysis determines the long-term investment value, while short-term analysis predicts the short medium-term price movements. So as we can see here, those two have a different timestamp to where they'll be useful at. As you can see, fundamental is mainly useful for long-term, while technical analysis is mainly useful in short or medium-term times decisions. And another thing is fundamental provides insight on what to purchase, while technical provides advice on what to buy or sell. Now, as I read through these different functions about these analysis, we can see that they both offer a different, unique perspective. However, they both can be valuable in a different context, as in, they are more better in different situations, and they have their own uses. Both of them each have their own limitations and merits, both good and bad sides to them. Now, while both analyses may differ from each other, it is neither approach is universally better than the other. You can't say one is better than the other because different each of them has their own advantage over different contexts. As we can say, like one analysis is good in this context, while another is good in that context. So they both have their own useful merits. Now, there is a similarity between these two analyses, and that similarity is that these analyses requires a lot of data, a lot of research, and it can be requiring a lot of reading through the diagrams, to the data, to the price movements. All of these can be quite overwhelming for an investor as yourself, as it can be too tiring and hard to basically handle it. So there is some similarities between these two. Now, upon learning about these analysis, these two approaches really help investors analyze the market and securities, and is both useful for you as an investor to learn these as it can help diversify your portfolio. These approaches are the two trading disciplines that investors such as yourselves will use to help make more informed investment decisions. Now, as we go on, I'm going to be talking more about technical analysis because technical analysis has much more has much more to go through compared to fundamental, and so I'm going to be talking about technical analysis has its own two methods within itself that is going to be useful in diversifying portfolio. So it has two types. One is moving averages or MAs for short. So basically, it is a simple technical analysis tool that investors and traders use to determine the trend direction of securities. It basically summarizes the data points of financial security over a specific time period. Now, here we also have another type of technical analysis, which is Relative Strength Index, or also known as RSI. Now, RSI is a momentum oscillator used by market analysts and investors to measure the speed and change of price movements. Now, this basically evaluates changes that help investors identify overbought or oversold conditions. Now, it provides crucial insights for making informed trading decisions. You will learn this more as we go through as I show you the example. But first, I'm going to be talking about the company that I'm going to be used as an example with, as it is going to be very important as you know. So, for example, this is going to be a short background. So, Alphabet Incorporation was originally founded as Google in 1998. It is known to be one of the world's largest technology companies by revenue and is considered one of the big five American information technology companies. It is one of the famous companies in the world and is even being ranked as one of the top 10 best stock companies to invest. So, here I'm going to be talking about basically how RSI and MAS, I'm going to be using those two technical analysis on Alphabet Incorporation and going to be showing you the examples as to how it works. So as we move on, here is an example of how we use technical analysis moving averages. So as you can see by this graph over here represents the stock price charts for Alphabet Incorporation. So you can see the patterns there. It represents the trends. And it's important to know that when we see the graph, we have to look carefully at what direction the trends is moving at. So let's say if, for example, if the trend is considered upward, it means the prices are high. If the trends are moving downward below, if the price moves below, then the trends are seen as downward. So as you can see, down means below trend, or up means high trend. So what does this show us? So basically, moving averages, it really helps us to identify market trends and provides a clear overview of the overall trend direction. So it really helps us investors provide us the great knowledge of the movement of these trends, and it generates trade signals. So the trends can be very useful for us investors as we'll be able to manage and understand more of the price movements and when the trends are usually high or low. So another thing is it's also called moving averages because it's always constantly recalculated based on the latest price data. That is also a fun fact. So moving on, I'm going to be talking about RSI data analysis. So here is RSI, an example. So here is another different graph. So this graph shows Alphabet Incorporation's class stock price from December 2023 to June 2024. So here, as you can see, we will mainly focus on the graph that is below. So the blue color graph is the one that is mainly RSI. So what does RSI really do? As I told you before, it's usually to help investors like us to provide warnings of potential trend reversals. So basically, this graph it really helps us identify market conditions and potential reversals. It is able to measure market momentum, identify overbought and oversold conditions. Now, RSI has its own sensitivity to market momentum, making it essential for us traders needing timely insights. It really is important because it really helps us make informed decisions in both volatile and stable market conditions. It really helps us to understand, but also to help us teach us basically when is the right time and when is a good time to invest in this sort of data. Now, as we learn both through these datas, RSI and MAs, or moving averages, are both important as we need them to really help us to diversify our portfolio, help us gain information, and it really helps us to gain more knowledge on basically what we need to do or what we need to be prepared on before investing. And lastly, that is all. I hope my video will teach you all I hope my video will teach you very well about the topics that I've taught today, and I thank you all for watching. Bye.